So the Fed cut rates where next for the S&P. This is Charlie giving you Tuesday evening / Wednesday's video. So a surprise announcement via the Fed today. They've cut interest rates by 50 basis points. It's the first time that they've done an emergency rate cut since the financial crisis. Is it overkill? We just don't know until we get maybe 2 months or so into the future. However, excuse me, I was having discussions with some of our traders this week about when markets moves are obvious as opposed to when they are less obvious. So no market moves are completely obvious, by the way, but bear with me on that. So for now, the market has sold off. The S&P sold off. We've talked about that. We've talked about the key reversal. We've talked about, and I talked about the end of last week about, remember the McClellan oscillator getting minus 200 below minus 200, and look, we've had that bounce on the back of that. So, but is it too obvious to short the S&P for the next leg down? Is that the obvious thing to do? And my concern is, yes, that is the obvious move. Once we have like a big move like this, that is it a case that the retail traders around the world are all going to be looking to short because that is the obvious thing to look at? We've had these big reversals, everything else. Yes, it is. So always look at the markets from a point of view of, okay, if something's really obvious and from a sentiment perspective, you can pick up that traders all around the world want a shorter market like this S&P, maybe you should hold fire for a while. It's not to say that the S&P, I don't think, can't come down lower, but what would be a less obvious move? Maybe that the S&P holds for a bit, maybe comes up a little bit more over the next week, 2 weeks, 3 weeks. So that the people who got too excited and shorted too soon get stopped out or just come out of their positions. So that's the way I'm looking at it. Now the S&P's had a bounce, and other markets all around the world have had bounces, but now the S&P has had a bounce. Hold on a second, my dog's barking and I have to shut him up. That seemed to have shut him up. Shouted at him. Anyway, so where was I? So they get stopped out. We've had some bounces. Maybe we need a bit more of a bounce. So that's my sort of view. I could still be wrong. Nothing's 100%. But it makes me a little bit concerned when something looks too obvious. Sometimes you still have to take a trade. I took a trade which I thought was an obvious trade just a week ago. And so sometimes you still have to take trades which are obvious, but you can position size accordingly if you still feel like you want to take it. So rather than maybe being a normal size position, you can put in on this S&P a smaller position if you want to trade it. For me personally, I'm just sitting back and watching the move for now. This is another thing. When you get these big moves in the markets like we've had over this past week or so, if you've not capitalized on those moves, the thought process is FOMO, fear of missing out. And so you then start to feel frustration at, oh God, I missed the down move, and then I've missed the up move, this bounce that happened just yesterday and into today, and let alone what's going on in the currency markets. And you look at what the euro's done over this past week or more and how much of a move that's had. So you start to, the feeling can be there, I've got to be doing something, I've got to find something, there must be a trade that I must get myself into. And that's a natural response when you're seeing lots of big moves in the markets. Just still be careful. Lost my train of thought, I had to stop the dog again. But anyway, that's the realities, isn't it? Realities of work, home life and stuff. So the feeling is that you feel like you've got to do something. Don't do it. Don't rush in. Still, you just got to wait for. No, don't get me wrong. If there are setups, which there are more likely going to be setups in higher volatility markets, but do make sure that you're not just chasing a market just because you feel you should be doing something. That's my advice to you this week. So a bit of fear of missing out. S&P, what to consider. Well, again, going back to the S&P and what's going on there, there was the opportunity was coming in at the end of end of last week when I was talking about it. But we've had a bounce now. It's had a decent bounce. Do you carry on buying it? Well, where do you put your stop? Sometimes you just got to say, okay, I'm going to take a step back, or you're going to sell it. Okay, if you want to sell it, fine, sell it. But I'm just saying, what is the obvious move? So when I look at something like this, I think that may be a bit too obvious. Maybe it'll come down today and tomorrow, but is it going to roll back over to new lows straight away here? Maybe, but I'll just take a step back and take a breather for the time being. So that's my thoughts for this week. I'll be back in touch at the end of the week.